Hey, good morning, everybody. Welcome to Tuesday. Sorry I missed you yesterday. Took a little extra day off to visit some friends. So had a great weekend. I hope you did too. Though I left it with Dave yesterday, and it was a little sketchy, wasn't it? A little down day. But we'll have to see where we end up today before it's all said and done. I want to remind you, though, and I think this is really important. We have a lunch and learn and an after work and learn coming up this week on Thursday. So after work and learn, lunch and learn, all you have to do is call our office at 382-0037 to get registered for that. Now, what are we going to talk about? Well, look, if you are 5 years out from retirement, do you want to run out of money in retirement? I don't know anybody that does. So we have put together a short presentation on three things that you need to make sure you understand before it happens to you when it comes to the market. So talk about three things, short and sweet. Call our office to register 382-0037. If you are 5 years out from retirement, or if you are already retired, this is even more important for you. Because of the things I've seen happen in the last market downturn. So, hey, we're looking forward to having a great group there. We got a few spots left for lunch and learn. We have a few more, even more than that, for the after work and learn. So give us a call and let's get scheduled for that. Dave will be with us in just a moment.
Kind of that, I was referring to a drip syndrome yesterday morning at this time. And we just got a whole pile of stuff. The situation with Syria, Turkey bombing in there and messing with the Kurds, and us saying we're going to pull out, and almost nobody seems to agree with that. The Chinese trade talks look like they're in a weird state at the moment, at the very least. Yesterday, the word got out that they want a piecemeal deal, kind of do it product by product. We're looking for the whole deal, and now the word is that the Chinese delegation might even adjourn the talks early. Just it's that unsettling feeling that nobody feels good about.
Well, that's right. And I think some of that may have leaked out yesterday and caused some issues. And we're seeing that continue to be an issue this morning, along with all the other things that we're getting from the big economic numbers that we're finally starting to trickle in.
Yeah, those big economic numbers to start our month out was the producer price index we got in this morning. Overall producer price index, that's wholesale inflation in shirt sleeve English. It actually fell by 0.3%, and the core, once you get rid of electives like food and energy, it was flat. And the market was expecting something a little different, I gather.
They were expecting something a lot different, Dave. When it comes to the regular PPI, they were expected to increase by 0.1%. So that's a 0.4% miss there. Now, that's a pretty significant deal. And on the core, they expected it to go up 0.2%. It basically didn't go anywhere. So I'm thinking that's not a good number, but it also gives rise to the possibility now and gives even more fuel for the Fed to be able to lower interest rates back down again.
Yeah, we chatted about that before we went on the air. You got two levels of conventional wisdom. One of them is that, okay, fine, inflation is going nowhere. That should make the Fed look much more earnestly at the notion of another interest rate cut. Other side of that coin, though, is any time an inflation index number, even a single data point, goes negative, everybody gets really the willies over the concept of deflation, which is legendarily harder to fix than inflation is. So we might be, the fact that the markets haven't moved positively on that news would tend to indicate that maybe they're more worried and reactive to the deflation threat than they are the anticipation of an interest rate cut.
Or the fact, Dave, that the interest rate cut may not be enough to offset what they're seeing in those numbers, whether there's deflation or just the fact that we're getting inflation is declining so much, and that all those numbers could possibly affect our GDP number.
Absolutely, and that we're expecting. What does that do to come out? First look at the third quarter. That's generally going to be about the third week of the month, isn't it?
Yeah, I think it's towards the end of next week, maybe.
Okay, I was at the end of the second, beginning of the third week. Generally, we start getting the first blush, and that's going to mean a lot on a whole lot of different levels because everything is just we're into that unsettled mode where nothing really looks good, and there's no indication that things have gone negative for us yet. But still, stuff like the trade deal, indications like General Electric announced that they were freezing pensions for 20,000 workers, which can always have a domino effect on their pensions. Start getting into Boeing getting in more trouble because now they got one of the pilots' unions suing them. It's one of those days where I really don't have any good news to share with anybody. Do you?
Well, that's true. And the other thing I saw a headline is that the White House could come out and basically limit pension funds, both public and private, from investing dollars into China. So that would be a huge deal.
That's a thing that there were some cracks in that armor yesterday. The Trump administration, it wasn't a full 180 turn, but now they're talking again about the notion of banning Chinese equity being traded on our exchanges. And that sounds like a nice patriotic thing to do, but there's a boatload of money that's invested in Chinese equity through our exchanges, and that could be a market mover of the first order.
Yeah, absolutely. And so that, I think, definitely is adding fuel to the fire of what we're seeing today.
Yeah, it just again, we look at a whole bunch of indications, and they all indicate the economy's slowing down, but none of them indicate us entering a recession yet. Now, yesterday I said if we can continue just this slowdown basis and end up with that soft landing, my feeling would be Paulson deserves a Nobel Prize for economics if he can manage this into a soft landing. Wouldn't you agree?
I would definitely agree, Dave, because it's easier to come off of a soft landing and to rebound relatively quickly and go from basically a slowing economy to a recession to back slowing and growing, better than just a quick drop.
Absolutely, without a doubt. Couple of reports you got in from companies kind of leading off earnings season. I saw the overall results for Domino's Pizza, and it didn't look bad, but I gather the investment market had a different thought in mind.
Well, they actually missed on earnings per share by 2 cents a share, and revenue was below the forecast as well. Same-store sales, which is one of those key indicators that they like to look at, they missed the street forecast also. They're growing competition from being able to get third-party delivery services is hurting them. But my initial reaction was, man, when pizza starts to lose, that's not a good sign for the economy.
That you got a valid point. I was just looking at the fact that they were up, which I considered good news in the face of all that competition. But yeah, if they can't make the numbers on pizza, the world is about to come to an end.
So I'm not sure what numbers you're looking at, but I got them. They're down right now, 5%.
Lord, no, I was talking about the sales in the first source.
Well, those were all misses.
Yeah, I know. Missed the expectation, but in absolute terms, at the very least, they were growing.
Yeah, they're still growing basis on as far as year over year.
Yeah, that basically was what I was saying. Okay, fine, they're coming back, they're doing better, but nowhere near as good as the market expected. Yeah. You had another report out to lead off season. What you got?
I got Helen of Troy, which is the maker of personal care products. Now, they did come in and beat pretty good by a little over 25 cents a share. Revenue was ahead of forecast as well. And then they raised their full year guidance, so both on revenue and earnings. So some good things happening with them. Domino's was down 5%. Helen of Troy is up 5.25% this morning.
Good to have some news to add. I think you and I were looking at the calendar, and I think we're going to start seeing the big financials for the fourth quarter earnings season. Probably start to see them toward the end of this week, we're expecting, right?
Let me see. I think we got Citigroup is the first one reporting on Friday.
Okay, I knew it was toward the end of this week we talked about when we were scheduling things out earlier. Setting the table again for this morning, it was a red ink day yesterday on Wall Street, not earth-shakingly so, but it was 1/3% in all three of the major indexes. Dow down 95, NASDAQ down by 26, Standard & Poor's down by 13, NASDAQ the 1/3% loser, Standard & Poor's the big one down by the better part of 0.5%. That looks good compared to what we're looking at this morning 45 minutes early. Phillip, how bad is it so far?
Yeah, it's pretty red this morning, Dave. We got the Dow down almost 0.7%, $180. The S&P 500 down about 0.6, $18. NASDAQ's down 0.6 at 46 3/4. I found this one interesting. We got small cap 2000 down 1% this morning. So yeah, we're seeing some definitely some movement there, which is not a good sign. They've seen a pretty rocky road here lately. And then we've got gold and silver both up. Gold's up 1/3% to 15.09 an ounce, and we've got silver up 0.6 to $17.65 an ounce. Look at this, man. Crude oil down almost 1.5% to $52 a barrel.
Yeah, I'm sure we're a little under 52. That's almost promised land level as far as the price of oil is concerned. Overseas world markets, by and large, Asia was up at the close early this morning. There was a tidbit news item that Boris Johnson and Angela Merkel had a telephone call between Great Britain and Germany, and they didn't get along one tiny little bit. Add that to conventional wisdom coming out in the papers over in England that there is no capability of a negotiated exit to Britain. That means that the German markets are just falling like a rock this morning. England a little bit less, but still solidly in red ink over on that side of the pond. Phillip, somebody needs help in terms of stabilizing a retirement and getting some predictability to what I'm going to have when I retire. I need help. How do I find you?
You know, Dave, one of the most important things when people head into retirement is making sure their money lasts as long as they do in retirement. And so we have our Lunch and Learn and an After Work and Learn this coming Thursday. The deadline to register for that is going to be tomorrow morning. So we got a few spots left for the Lunch and Learn. I got quite a few spots left for the After Work and Learn. But look, you need to understand these 3 key principles to make sure that your money lasts as long as you do. Call our office at 382-0037 to get registered for that event this Thursday at noon and at 6 p.m. Call and get registered for that. And then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on your sister station, News Talk, 7:30 a.m.
And back again here tomorrow morning, where hopefully we'll have some good news to report on the national economy at the moment, right?
That would definitely be nice.
It would be nice, and it doesn't look like we're going to have much based upon the pre-market numbers, does it?
No, it doesn't.
Hey,
as we close up, just want to remind you one more time about the Lunch and Learn and After Work and Learn we're going to have on Thursday this week. So please call our office before noon tomorrow, 382-0037 to get scheduled for that event. We're going to talk about 3 key things that you need to understand to make sure you don't run out of money in retirement. If you are 5 years out from retirement or already retired, this is a very important little Lunch and Learn we're doing. So, hey, take care. I look forward to speaking to you again tomorrow.